Of course, the primary reason why everyone is talking about Opendoor technology stock is because of how much the price is increasing, as is usually the case when a price increases by this much, this quickly. It creates a lot of investor excitement. But there's more to the story than just that. And I'm going to talk about some of the fundamental reasons that led to this stock price to soar by this much. Of course, if you recall back in February, I told investors that this stock was undervalued. And fast forward to today, the stock price is soaring. So I'm happy to see the result of that recommendation back in February that I made to buy this undervalued stock. But is the stock still a buy? I'll answer that question in this video, and I'll answer and discuss more of the reasons why this stock price is soaring as much as it is, and what's leading to investor excitement surrounding this business.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the reasons investors got excited about Opendoor stock is because of a shift in strategy to a more asset-light revenue generating source. And I've talked extensively on my channel about how lucrative it is to operate an asset-light business model. It lowers the riskiness of the business, and it also allows you to grow more quickly without needing so much capital, which slows down your growth because you always need to go and ask investors for more money so that you can generate growth, and then go back and ask for more money so that you can generate more growth. And so it just slows you down as a business, constrained by those large capital requirements. So the new revenue source for Opendoor, or an area where it's focusing more on, it's piloting a strategy, is referring customers to real estate agents for a more traditional sales process. They're going to see how the pilot evolves, but they believe that this channel will allow us to serve more sellers, monetize a greater portion of their sales funnel, and leverage their platform to drive more asset-light business. And that's the key there, is to drive more asset-light business and thereby decrease the riskiness of this business, which is already a very high-risk business. Not only is it still in the early stages of growth, but it operates a very asset-intensive business model, right? Buying a home is a several $100,000 investment, and you're holding that, their strategy, holding it and trying to sell it for a price higher than what they paid for it, is a risky proposition because home values fluctuate, and sometimes it takes longer to sell than you were expecting. Sometimes it needs more repairs than you were expecting to make. And so all of those could add downsides to this business model. And so having this asset light business model where you're just referring a customer to a listing agent just drives a quick revenue source and doesn't take any risk at all. And so the management team feels that this is a smart decision at its current moment. So another thing that investors have liked about Opendoor is they're increasing their defensiveness in the face of the rising macroeconomic headwinds. They're maintaining their pricing discipline, even actually increasing their pricing discipline because they're proactively increasing their spreads. So what that means is if they think they can resell a house for $500,000 and they were previously making a bid, let's say for $450,000, they're now making a bid for, let's say, $440,000. So giving a greater margin of safety there between the price that they think they can sell the house for and the price that they bid to buy the house. So that will impact acquisition growth, right? So if you're offering sellers a lower price, then you're not going to make as many purchases because sellers are going to opt to either keep their home or to sell through a listing agent and try and generate a higher sales price on their homes. But the management team feels that this is a prudent trade-off to make right now because we're going through a time where the risks of recession are increasing. The housing market is declining. It's one of the stages in our economy that we're starting to see the early negative impacts from tariff policy. People that were trying to make a decision between buying and selling homes have now put those decisions on pause because they don't know how they're personally going to be impacted by the tariffs. They're starting to see positions in their company decreasing. They're starting to see hours decreasing. They're starting to see increased talks of layoffs, etc. And so people are saying, all right, maybe we hold back and let's see what's the ultimate consequence of the tariffs. Will there be a recession or will the US economy continue booming along? We just don't know yet, and we're a little more concerned. And so we're going to be a little more cautious. By the way, this document that I'm reading from is Opendoor Technologies first quarter 2025 earnings call transcript. This document, the highlighted document, is available for all my channel members to see. And you can join my channel for less than $5 a month, where I have this specific earnings call transcript available for you to follow along. And I have more than a dozen, perhaps closer to 2 dozen companies with these earnings call transcripts, and I continue to add to these multiple earnings call transcripts I'm adding weekly. The company's also improving the website to continue to add new features to their algorithms like school district quality and active competition. And school district quality for families that have kids is one of the most important decision points when making a home purchase decision or when moving to a new city or new location. You want to know as a parent how good are the schools in that area. It's one of the main decision making criteria. And so including that in the algorithm will certainly help make better connections for their customers. So I mentioned the management team is becoming more cautious and they are decreasing their marketing spend in the upcoming quarter to be meaningfully lower than the first quarter. Additionally, their fixed operating expenses in the first quarter were $19 million lower, or down 33% from the same quarter last year. And the market has appreciated these moves because, as I mentioned earlier, the macroeconomic headwinds impacting the housing market are accelerating, meaning the housing market is getting worse at an accelerating rate. And the company is preparing for that by having lower costs to deal with these slower purchase and sale decisions. It's not just one side, it's both sides. Fewer people are listing their homes for sale, and fewer people are looking to purchase homes. The housing market is still in a bit of a stalemate, even though it's improved. The number of listings has improved slightly. It's still down, relatively speaking, from 2019 levels. So the COVID-19 pandemic disrupted the housing market, and there's been a mismatch between inventory and buyers. And now the tariff policy is worsening that mismatch, creating more uh, wait and see decisions from people that are considering buying or selling a home. So I mentioned that I had Opendoor stock rated as a buy. In February, I rated the stock as a buy. But given how much the stock price increased in the last week, and today it's up 111%, before I started recording this video, I downgraded the stock to a hold. Uh, because the price has increased so much, I don't see this business as being undervalued. You can see my, oh, wow. I just, in the matter of recording this video, the price has crashed. It was up almost 111% when I started recording the video, and it's now up only 54%. And so the market price has fell down back to $3.79. It's now closer to my intrinsic value per share calculation of $3.68. So members of my Discord channel, they got the early news when I downgraded this stock this morning from a buy to a hold when it was up 111%, and now it's up only now it's 66%. Man, this is one of the most volatile price movements I've seen since back in the meme stock frenzy with GameStop and AMC. This is becoming a very risky situation. When the price is moving this violently, it makes it more risky for your capital because you're at risk of losing so much of your money so quickly. So earlier this morning, when the price was up 111%, I downgraded this stock to a hold from a buy because the price had increased so much. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.